Hello, everyone, and thank you for joining us at the Lytham Partners 2024 Spring Investor Conference. My name is Joe Diaz. I'm a managing partner at Lytham Partners. For this presentation, we welcome Lincoln Educational Services Corporation, which trades on the NASDAQ under the ticker LINC. Joining us from the company is Scott Shaw, President and Chief Executive Officer, to give us an overview of the company. Lincoln Educational Services Corporation provides various career-oriented post-secondary education services to high school graduates and working adults in the United States. At a time when many are questioning the validity and the cost of traditional college and university education, Lincoln offers a more viable career path for many. Before we jump into the discussion, I want to remind everyone that management is available for one-on-one meetings throughout the conference. If you have not already signed up and would like to schedule a one-on-one meeting, please visit www.1x1@lythampartners.com. Again, that's 1x1@lythampartners.com. From there, you can click on the investor registration button to make your one-on-one selections. Scott, thank you for joining us today. We greatly appreciate your time.
Thanks, Joe. I appreciate being here and telling the Lincoln story. This is an exciting time for our organization for sure.
Well, we're looking forward to hearing it.
Yep.
The floor is yours. Go for it.
Okay, great. Thanks, Joe. I appreciate it. So I'm going to get right into it for my presentation. This is also available on our website. Everyone knows the safe harbor rules. But as I said, this is an exciting time for Lincoln. I think everyone knows that there's a huge skills gap out there. It's been there for a long period of time. Employers are desperate to get trained people, and we are certainly a very good source for those trained individuals, which I'll share with you. We're also a leader in what we do. We've been around for 75 years, and most of the markets we're in, we're either the largest or second largest, and there are many, many markets where we're not in, which leads to the next one, which is our growth opportunity that we are seeing. And we're seeing unusually large growth right now because typically when unemployment is as low as it's been, below 4%, we don't have the type of growth that we are seeing today, but the marketplace is changing. More people are looking at the trades as a very viable career, and as certainly as an alternative to college, and I'll talk more about that. And as we grow our top line, we also are growing our bottom line by even a greater percentage point. We're seeing good operating leverage. We spent the last 2 years investing in our business to take advantage of growth and drive more profitability, and I'll be sharing that. And we're able to do that because we have no debt. We have over $100 million worth of availability with a new credit facility, and so we're well positioned to make the investments that we see ahead of us to continue to grow this business. And finally, we are becoming more efficient. COVID has taught us a lot. We've moved to a new blended learning platform, and that's been very attractive to students and will drive greater profitability for us going forward. So our basic growth strategy is laid out here. On the far right is inorganic growth through acquisitions. We've made a lot of acquisitions in the past, but right now we're really focused on the organic growth. And that's coming from greater efficiencies at each of our school campuses to make them more profitable. It's from introducing new high in-demand programs. We're going to be adding 6 this year, another 3 next year. And it's also from opening up new campuses. We haven't opened a new campus in over 15 years. In March, we opened our first new campus. About a year from now, we'll open our second new campus in Houston. And I expect that in the next couple months, I'll be announcing a third new campus that will open in 2026 as well. So with all these activities, we forecast good, robust growth for us. We see the top line coming up to almost $550 million in 3 years, with about $90 million of EBITDA, significantly higher of where we ended last year. This is just giving you a bridge of how we'll achieve that. The midpoint of our guidance, which we just raised at the end of the first quarter, is around $39.5 million of EBITDA, about a 9% operating margin, and we should be driving that up as this shows to the mid-teens over the next coming years. Each of the initiatives I just laid out, the greater efficiencies at our core schools, the addition of new programs, as well as the addition of new campuses, is going to enable us to achieve this good, strong growth over the next 3 years. As I mentioned, we've moved to a hybrid learning model. During COVID, well, let me say this, prior to COVID, we were very much a hands-on training institution. That's why students come to us, is to learn hands-on skills. During COVID, we had to go 100% online, and then as quickly as we could, we started moving to this hybrid model. And what it does is it means that students are using about 2/3 of the time they're coming to our campuses for their education. The other third of the time they're doing when it fits their schedule, so they're able to do that remotely. So that means that students are only coming to our campuses about 4 hours a day, 4 days a week, which frees them up to work, because many of them need to work to pay for their education and to support themselves, as well as gives them more time to take care of their families. The students find this flexibility very handy and very attractive, and we also are seeing that it's creating greater efficiencies for us that we're starting to experience this year, and will gain some momentum next year in lower costs for education, for training each of the students that we have. This is the roadmap of what the profitability is of a new campus. New campuses cost anywhere between $15 to $20 million. We do focus on trying to get about 30% IRR on those new campuses, and we expect them to generate a minimum of about $5 million of EBITDA 36 months after they've opened. There are obviously some startup costs in the beginning, which is why we show adjusted EBITDA. Our new programs that we have are similar in that they actually have a higher ROI. Each of our new programs, and I said we're opening up 6 this year and 3 next year, should generate about $1 million each in EBITDA about 36 months after they've opened. We have made acquisitions in the past. We haven't made acquisitions in quite some time. I just put this down there, though. We are constantly looking to see what's out there, but an acquisition target is really going to have a high threshold of need for us to get into it. And that need or desire to make an acquisition could be they have a unique program mix that we think we could leverage across our platform to get additional growth. They might have a good market presence in an area that we're not in today. And they might have some other unique characteristics that we think we could leverage across our platform. So I just put this out there as we do look at acquisitions, and who knows when we might make one, but we have the capabilities. As you'll see later, my management team, we have an average of 19 years with Lincoln. And so most of the people involved in acquisitions that we used to make back in 2010, 11, and 12 are still around today. So exciting news is that as of COVID, our students were all deemed essential workers. During COVID, our students remained employed while a lot of students had to go home or stop their employment. We all needed to have Amazon deliveries and other things working, trucks and cars and things of that nature. Everyone needs to have their electricity on, otherwise they couldn't communicate through the internet or do their jobs and work. Obviously, you need HVAC to keep offices and homes running. You need nurses and things of that nature to take care of healthcare. And during this whole pandemic, the government came up with this new designation of essential workers. And what that also has done is raise the stature, I believe, of these trades and just made people more aware of how strong and needed they are, and also what great opportunities they are for students to really start off and enter the workforce. Our campuses today are in 13 states. We started in New Jersey, that's our headquarters, and so we have a strong presence in the Northeast. But we have expanded into other areas. And you can see on this map, we're not in a lot of the high growth areas that exist today, mainly in the South and in the West. With that said, we just opened up a second campus in Atlanta. We had one in Marietta, which is north of downtown. And this new one is at East Point, which is about 10 minutes from the airport. It's really started off very robustly, which is a good sign that our research was accurate and there's strong need there. You can see our second new campus is there in Houston, certainly a large market. It's either third or fourth largest in the United States, depending when I look at the statistics. And there's huge need and demand there. That'll be our second campus in Texas. But we are looking for additional campuses in markets in the South and the West. But also, there are some opportunities still in other states where we are today to open up new campuses. And so wherever there's the right opportunity that's going to give us the highest ROI, that's certainly where we'll open up a new campus. The market we serve is the largest market in the workforce, and that's the middle skills market. And middle skills are skills that you need that are greater than just what you would get graduating from high school, but less than what you would get from getting a 4-year degree. And the lower skills are certainly some of the skills that are going to go away in time by technology, whether it's self-driving trucks or cars or things of that nature, or checking, doing your own checkout at restaurants or in retail. Those types of jobs are shrinking. High skilled jobs, could be threatened a little bit by AI. There's certainly a lot of technologies focused on some of those, but there always will be this need for middle skills. And in particular, for what we offer, everything that we've looked at, AI is not going to take away these jobs. AI cannot fix your air conditioning system. AI cannot help you as a nurse. Now, AI may assist our students and our future graduates with their jobs, but you're still going to need that hands-on person to actually get the task done. So we think that that's also helping drive interest in our programs. We do we do find students from high school. About 20% of our students come right out of high school, but the bulk are adults. So the average age of our students is 25. And we get those adults, some of them are from the military, about 10% of our students, but the rest are those that have been in certain jobs that just are not earning them enough money, and they want to do something that's going to better support their families. And so they come back to school and get a skill that they'll have for the rest of their lives. As I mentioned at the beginning, everyone knows about the skills gap that's out there. It's something that's been created over the last 4 decades. We've been telling everyone you got to go to college to affect that change, which really started in the 80s. They started eliminating a lot of the VOTEC programs from high schools so that they'd have more time for academics to get more people into college. And unfortunately, it's, like many kind of government initiatives or large programs, it's not always well thought out, and there are always consequences. And what's happened is we've taken these programs out of high schools. Students aren't even aware of what these trades are. And now as their parents or the baby boomers, people like myself, are graduating, employers are just finding it hard to find new replacements for them, which is great news for us, which is why we have more job opportunities than we have students. The silver tsunami, as people call it, is going to be going on for the next decade, which is great. As was mentioned in the intro, people are becoming much more skeptical about the value of college and why should I go to college? And the amount of debt that students have is just is huge and very burdensome for many. We offer a faster, cheaper alternative to going to college. And people are realizing that these are good, solid careers. As I mentioned, they're essential workers. They stay employed. They're good incomes. Everything that we offer is only focused on giving our students a strong ROI. And so they are going to have good job opportunities. And as I also mentioned, there is less stigma, I believe, in the skilled trades these days, which is good news for us. Also, we're in a very highly fragmented market. As I mentioned earlier, we're the largest in most of the markets we serve, but this is just showing you, these are the opportunities that we have as far as new hires in each of the fields that we offer as determined by the BLS. And when you look at how many graduates we have versus what the annual demand is, you can see that we have a lot of room for growth. Only 2.6% market share in the transportation skills trade side, and less than 0.5% in the healthcare and professional side. So we really have a great opportunity to grow, and that's what we're going to take advantage of going forward. Many people ask me, well, why do they go to you and not just go to community college? A community college is far cheaper than you are. And as I often say, you get what you pay for. We offer a very different experience than what you get at a community college. First of all, our students are customers, and as customers, we provide them with a lot of support. You just don't get a lot of support at a community college. Just by the definition of them, a community college is serving that community. They offer a broad array of programs. They're very much like a department store. We can get most anything, but we're more like a specialty store where we just focus on a few key areas, and therefore our offerings are far richer and deeper than what you can get at a community college. Also, all of our faculty are from the industry. They have a minimum of 3 years and an average of around 11 to 12 years of experience. They're not there just to tell you what's in the textbook. They're there to give you the edge on what the job entails and what you need to do to become successful in that job. Our shops, Again, we're like a specialty store. We invest a lot more in the equipment that you'll see. That's what students are excited when they tour our campuses. They see everything that they can touch, feel, break, fix. And that's what attracts them to these fields. And we offer a richer environment. We're bringing technology into various areas. We're trying to add gamification where we can. We've partnered on the auto side with Electude, which is a Dutch company, the largest trainer of in the education world for automotive training around the world. And we're the first campus in the United States to use their new trainers that integrate with their software. And our students and faculty have really responded very well to that. Finally, why do they come to us? Because the likelihood of you graduating from a Lincoln Tech school is more than 2 to 1 compared to graduating from a community college. Our graduation rates are in the high 60s. The average community college graduation rate is around 30% or so. Our placement rates are around 80+%, moving towards 85%. And you really don't even know what those statistics are, as community colleges don't need to track that. So the opportunity that one has by coming to a Lincoln Tech is just a much richer opportunity, and it's a quicker one. Our programs are all designed to get students in and out, and so within 12 months, they're out there in the workforce working. As I mentioned, we are the largest, I say east of the Mississippi. This is a little bit west of the Mississippi, but basically east of the Mississippi, we're the largest provider of automotive and skilled trades graduates in the post-secondary system, and yet still we have a lot of opportunity for growth. We also attract a lot of employers to us, which is great. These employers help our students. They help us. They give donations. They provide great career opportunities. Some of them pay us to provide secondary forms of training to our students to make them that much more employable with them. We're one of the largest, if not probably now the largest provider of Tesla technicians. Tesla has, we have 2 training centers with Tesla. They came to us just because, frankly, they couldn't meet their need at the community colleges. And as you can see, we work with a lot of very large organizations, and we're constantly building this network of employers. We are highly regulated, and so we need to be at the top of the charts, and we're at the top of the charts for all the regulatory metrics. 90-10 is one of the ratios. We can't have 90% of our revenues coming from Title IV. We're safely at 81%. CDRs, or cohort default rates, they basically are low single digits, better than the average school out there, to be honest with you. Our composite score is a way of the Department of Ed evaluating us from a financial standpoint. 3.0 is the highest rating you can get, and that is our rating. So we're in very good standing. Our first quarter was very strong, 15% growth in starts, 17 million increase in revenue, and as you can see there, our adjusted EBITDA improved dramatically for us, which is great. We're starting to see some operating leverage, and given the guidance we've given, we expect to increase about 200 basis points our margin for the year, and expect that to continue certainly over the next 3 to 4 years. And as I mentioned, a very solid balance sheet, which is going to enable us to enact all of our initiatives that we have. Again, this is just showing you what our path has been over the last couple of years: steady growth in revenues, steady growth in starts. As I mentioned, in 2022, we've been making investments in our business, which is why the profitability had declined. But as I shared with you, our guidance has our profitability increasing meaningfully in 2024, and you can see that already here in the first quarter. And again, this is looking at that just to tell you our guidance, which will be on my next slide. So in 2024, our margin will go from about 7% to about 9%. Our adjusted EBITDA is 39.5, so it'll be higher than where we were in 2021, and going up to that $90 million number in 2027. Here, I just want to highlight, we are expecting to spend a lot of money this year. About $70 million will be deployed in opening up the new campuses, and we're also relocating 2 campuses. And those are our Nashville campus and our Philadelphia campus. Nashville, we're going to go from a 12-acre, 12-building facility into one standalone facility that's going to be much more efficient, state-of-the-art, and enable us to add more programs. Our Philadelphia campus is our only solo discipline campus today, just offering automotive. By next summer, when we open up, we'll have automotive, welding, electrical, and HVAC at that campus. So that will help foster more growth for us. My management team has a long tenure. As I mentioned, the average tenure with Lincoln is 19 years, which I'm very proud of, and we get along very well. And my board is really reconstituted over the last 4.5 years. I've brought on 6 new board members, which has been great, new energy. Our chairman retired just at our shareholders meeting. We have a search on for another new board member that will probably be locating in the not too distant future. And it's a really good group of people with lots of experience. Also highlight Carlton Rose there at the bottom. He's a Lincoln Tech graduate. He graduated from our Indianapolis campus, worked starting putting boxes on the back of UPS trucks. He retired from UPS last year in charge of every single piece of equipment, 400,000 pieces of equipment for UPS around the globe. So he's a great addition to our board. He's a product of the company, and he's a big supporter of ours, which is great. So in summary, we are the national leader. We have lots of growth opportunity. People are really excited about the trades, which is good for us. There's this large skills gap. We have more job opportunities than we have students. Employers are coming to us. And if the economy ever turns, which people keep talking about, things will even be better for us, because that's when students really flock to the trades, is when they're unemployed. I'm not seeing that happen right anytime in the near term, because I'm very happy with the growth that we're getting. And when, as I mentioned, we have lots of opportunity to continue to open up new campuses and replicate existing campuses, and that will continue to drive greater operating performance. And as always, Lincoln is very much focused on being the best, and therefore our outcomes and our compliance will be at the top of the heap. And that's my presentation, Joe.
Well, fantastic, Scott. Lots of exciting things going on. A couple questions here. In terms of the student base, and again, given current macroeconomic type conditions, how do you see that growth rate in terms of adding new students? Let's not even talk about the market going down and everybody being out of work and looking for something, but in the current situation, what's your student growth rate, in your opinion, in the next maybe 3 years?
Yeah, I mean, well, first of all, what is different is that we are growing, I'll say, without necessarily adding new programs and new campuses at a much higher rate today, just because more students are considering the trades as an alternative to going to college. So in a typical environment like this, at 4% and less unemployment, we would probably maybe see our revenues growing at the 3% or 4% level, but that's also with tuition increases. So probably maybe 1 or 2% student increases. We're seeing at a core basis, I'd say today, 5, 6, 7% student increases. And as we start layering in these new programs and new campuses, we'll be getting up to, at times, double-digit student increases. And I foresee that, I'll say, 8 to 12% student growth, frankly, over the next 3 years, given the activities that we have underway and just the underlying nature of the demand.
Walk us through the identification of a site for a new campus, and what are you looking for in terms of demographics there, and also what's the timeline once you break ground? How does this all come together?
Yeah. So I'll go in reverse, just as that's how my mind sometimes works. Now, unfortunately, it takes us about 2 years. So by the time we've announced we're going to open up a new school and get that school up and running, it's about a 2-year process. It's taken longer since COVID because we have to get so many different regulatory approvals. We have to get a building permit approvals. That process seems to take longer. We have to get state approval for the program. Then we have to go get accreditation approval. And then we have to go get the Department of Education approval. And each of those are kind of sequential. But so it takes about 2 years by the time we've announced the new campus and the first student is in that campus. What we've done is we engaged a third party to help us using a lot of analytics. We actually have a lot of data, needless to say, of who our students are, what their backgrounds are, who are the most successful types of students. So we give them that demographic information. They then have a database of student graduation rates at every kind of city and location around the country. So we're looking at demand. So we're looking at how many job opportunities are they in the field we're looking to introduce. We're looking at lots of Google information, how many people are searching for these types of opportunities. We're seeing how much competition is in that marketplace, given all those other two metrics that I've just outlined. And then there are other things that for our own particular facilities that we look for. The challenge is we need a lot of parking for the square footage that we have, so that can limit us in what we have, and we have also certain ceiling heights that we need if we're going to have an automotive program. But we've used this third party, and based off of the Atlanta market, as I mentioned, it looks like that they're hitting the mark for us, which is very exciting.
Well, that's really exciting. All told here for the company. We'll have to leave it there, Scott. Thanks for the overview of all the great things that are happening at Lincoln Tech. Again, as a reminder to our audience, if you have not already signed up and would like to schedule a one-on-one meeting with Scott, please visit www.1x1@lythampartners.com and click on the investor registration button to make your one-on-one selections. I hope you all have a great rest of your day.